is Yelena Subasic with Dean Dorton. Happy Thursday. We're one day closer to Friday. I hope everyone's been having a good week. So thank you for joining us today on this special webinar, 3 reasons it's time to graduate from QuickBooks. So we have Jim Norton, one of our senior technology consultants, who will be kind of discussing cash management, cash and accrual and things like that, comparing between QuickBooks and a cloud-based solution that we are a partner of, Sage Intacct. So hopefully you guys will learn some valuable information, ask questions. We have some time at the end. And yeah, with that being said, let me just go over a couple housekeeping items. This is being recorded, and we will do a follow-up with everybody to send out that recording. Also, if at any point in the presentation you have questions, there is a Q&A as well as a chat section kind of at the bottom of your screen. You'll see that little bubble. So don't hesitate to ask any questions. We have some time, like I said, allotted at the end for Q&A. So again, thanks for joining us. And with that being said, I'm going to hand it over to Philip Massey, our Director of Software Consulting Services, just to kind of give a quick spiel about Dean Dorton. So.
Hey, Yelena, thank you very much. Great to be here today. As Yelena said, I'm the Director of Software Consulting Services for Dean Dorton, and I have the unfortunate honor of standing between you and the wonderful presentation from Jim Norton. So I'll try to make my part very brief here. So a little bit about Dean Dorton. We are a full-service CPA firm. We're based or headquartered in Lexington, Kentucky, and we have offices in Louisville as well as Raleigh, North Carolina. By a full-service firm, I mean, of course, we do traditional audit and tax work as well as the business consulting work that we do in areas like cybersecurity, litigation services, business valuation, and of course, accounting technology, which is what we're going to talk about today. We serve really clients throughout the world. We've got a couple in Australia, we've got some in Canada. The majority of our customers are going to be in the Southeast region of the United States, but from an accounting technology standpoint, but we do work internationally. We are, and we're proud of the fact that we've been a Sage Intacct Premier Partner since inception of the program. So that means that we invest heavily in training. That means we invest heavily in marketing. We work closely with the folks at Sage Intacct to make sure that we are being the best partner that we can be. And we are glad and proud to be awarded a Premier Partner. We're also in the top 100 VARs, which is VAR is a value-added reseller. And so we're in the top 100 of those. This year, we were number 57, if I remember right, either 52 or 57. But we are way up in that top 100, so we're proud of that as well. But basically, we're a group of CPAs who have decided, from our standpoint, that we like working with the software and the technologies more than we like doing some of the work that we officially went to school for. So we take that knowledge of what we have for financial and business experience, we pair it with some technology knowledge as it might relate to coding or development or just configuration, and we give you a full service implementation of accounting technology within your firm. We have a next slide. Okay. All right. So that is, this is Jim Norton's presentation from this point forward, but you guys are in great hands. Thanks again for coming, and I'm going to turn it over to Jim.
Great. Thank you. Hi, everyone. This is Jim Norton. I am a senior technology consultant on our software consulting team. I work pretty much exclusively with Sage Intacct. I do also have my CPA and have experience as controller, CFO, and many different roles in a wide variety of organizations. So I'm here to talk to you today about cash management inside Sage Intacct and how various functions around cash management are different and quite frankly better in Sage Intacct than they are when you're working with QuickBooks. So objectives of this session, these are the things that you're going to learn. They're not in any particular order, but you're going to learn how Sage Intacct does cash and accrual reporting right, learn some common types of transactions, how they can and should look like in a cash and accrual environment, learn the streamlined process Sage Intacct has for inter-entity cash transactions. We'll show you some examples of how we've used the native capabilities inside Sage Intacct to build some pretty powerful reporting around cash management that replaced a lot of complex manual schedules that used to exist. And we'll give you a comparison of the workflow and automation solution features along with some options for working with the Open API. So first thing we want to talk about is just a little bit about Sage Intacct for any of you who may not be familiar or are new to it. So the key benefits kind of around Sage Intacct are that as your organizations grow, they're often going to have trouble finding a scalable accounting solution that can provide real-time insights, that can do consolidation across entities and give you better control over your financial data. Well, Sage Intacct provides a best-in-class true cloud solution. It has an open API so that you can have an ecosystem of marketplace partners catering to your unique requirements, all in a single solution. Sage Intacct also has dashboard analytics, approval workflows, and controlled access, which means all the functions across the organizations can see relevant, easy to understand data to help them make proactive decisions. So one thing that's unique and powerful to Sage Intacct is the dimension concept. And the dimension concept, you can kind of think of it as like hashtags for your accounting. So you're able to take transactions as you're recording them inside your accounting system and tag them with the appropriate attributes to give more detail about that data. And we would call that the dimension concept. So you're going to tag something to a natural account, and then you're going to tag whatever customer, vendor, employee it might relate to. You might tag some information about where that transaction is related to. So it could be a project, a department, a location. Or you might have some attributes that are more of like the what attribute, which is this is the item. So maybe this is the item that we charge the customer for from a revenue perspective. Or we could have class, which could be another kind of what tag that the data may relate to. So in practice, it will look something like this. You're going to have your natural account, which is in this example, in the screenshot, you're coding a transaction to account 6120. You're putting in the amount. And then all these areas that we've circled in red on the slide, these are our dimension values. So these are the different attributes that we may want to be able to report back on. So if we tag transactions to these attributes, we can then report back on everything that's using these attributes, and we can group them together and create all kinds of reporting that's centered around these dimensions. So what it gives you is an analogy that we like to use, like a Rubik's Cube for your reporting. You can take your financial reports, your operational custom reports, and you can twist and turn them to get the combination and the picture that you need to see of your data. It may look something like this report that we have on the screen. So this is just one example of the ability to take data. In this case, it's using the department dimension, and we're getting a summary of all of our different expenditures across departments. So that's one example. And then underlying all of this, and key to what we're going to talk about mostly today, is the multi-book architecture. So Sage Intacct is built giving you the capability to do something that we like to refer to as book stacking. And what that means is you're going to start with either your accrual books or your cash books as your basis for your reporting. But then you may have adjustments related to your audit, and you may want to reflect them separately and call them something like GAAP adjustments. And you may want to be able to see a column in your reports for accrual, followed by your GAAP adjustments, and then see what the total of all that is. That's what book stacking is. It enables you to isolate different types of transactions that you've recorded so you can see what the impact of them is. And your base for doing all of that is you're going to be starting from your accrual numbers or your cash numbers. So that's what the multi-book architecture gives you in a very quick kind of spiel. And the ability to do cash and accrual right is what we want to focus on next. So that brings me into how does it work when you're in Sage Intacct and you have a cash and accrual environment versus an accrual-only environment. So to kind of get into that a little bit as an intro, you do have the capability in Sage Intacct to have what's called an accrual-only environment. You have the capability to have what's called a cash-only environment, or you have the capability to do cash and accrual. Now, the underlying architecture is the same, and this is the same slide that I just showed you before. Basically, what you're saying is, I want to start with a base of my accrual books, or I want to start with a base of my cash books, and then where do I want, use those to build for my additional reporting or my additional GAAP adjustments, tax adjustments, and so forth. So there's multiple methods you can use in Sage Intacct to handle cash and accrual. And it's really a decision that you want to think through when you're implementing, or sometime shortly after you've implemented if you decide you want to add it on. And you need to really ask yourself first, how frequently do we want to report on both cash and accrual? If we want to do daily or monthly reporting on cash and accrual, we can turn on cash and accrual accounting inside Sage Intacct, and it will pretty well automate that for us. If we are in a situation where we only really want to do a quarterly or annually kind of adjust to cash to look at cash flow at a very high level, we can actually use Sage Intacct's multi-book architecture to record adjustments to cash basis and have a different set of reports that will show us that without having to go full-blown cash and accrual. So consider the following. With cash and accrual books, you're going to get to choose when you make a journal entry which set of books you're impacting every time you make a journal entry. You also are going to discuss with your implementer how you're recording corporate credit card charges, and we'll talk a little bit more about that in a second. But here's why this concept is important for those of you coming from a QuickBooks world. And I came from a QuickBooks world myself as a controller in some of my past roles. When you're working in QuickBooks, a lot of people are misled into thinking you can click that radio button at the top of your financial reports or GL or whatever, and if you click cash, you're getting cash reporting. And sometimes they're then very surprised to find that that cash reporting is not actually tying to their cash numbers and does not actually represent their cash activity. And one of the biggest reasons that that happens is the minute you make a journal entry in QuickBooks, QuickBooks is not smart enough to know whether that journal entry should be impacting your cash books, your accrual books, or both. So any journal entry is going to impact both your cash reporting and your accrual reporting, whether that is correct or not. And that is one of the biggest areas where people get into trouble and they ruin their capability to do cash and accrual reporting in QuickBooks. Intacct does this right so that you don't have that problem. So here we have, anytime you make a journal entry, for example, on this screen, you're going to have a list of journals where you have this journal impacts cash, this journal impacts accrual, and this journal impacts both. And you can see in my list of journals here, I've indicated that in the name to make it nice and easy and friendly. So this gives you the capability to designate which set of books you want to hit so that you're not making a journal entry that's maybe to accrue payroll costs and then inadvertently messing up all of your accrual reports, because an accrual has nothing to do with a cash basis report. So next I want to get into some of the subledger transaction scenarios and how they look. This is going to be, for the most part, pretty straightforward, should look familiar to anybody who's got even a basic kind of accounting background. So this example is when you record an AP transaction in Intacct in a cash and accrual environment. You record the AP bill. So say January 1st, you've recorded an AP bill. What is the impact going to be? It's going to debit expense and credit AP on your accrual books. On the cash books, that's going to do nothing. Then you pay that bill on February 1st on your accrual books. Obviously, that's going to be debiting AP, crediting cash. And then on your cash books, that's when the expense is going to be reflected. Similar thing in AR, except obviously the other side of the coin. So you record the invoice, that's when you're going to get revenue on your accrual books, and your cash books are going to have nothing. When that invoice actually gets paid, that's when you're going to get revenue on your cash books, and you're simply going to be relieving the receivable on the accrual books. When you have something like an AR advance, say a customer advances you money, so your accrual and cash books are actually going to look the same for the advance. And then you're eventually going to create an AR invoice, right, that you are billing the customer for that kind of money they've advanced you, so you have something to apply it against. That's when you get the revenue in your accrual books. Cash books has nothing at that point. And then finally, maybe a few days later, you're applying cash to that invoice. That's when the revenue happens in the cash book. So the key is really when it is applied in an advanced scenario. Now, this next one, here's where it's going to throw some people who are used to QuickBooks for a loop. How we handle credit card transactions. And again, it goes back to the way that I think of it, and the way that I think most accounting people think of it is, this is what real cash basis reporting is. So when you are doing a credit card transaction in QuickBooks, you record a credit card charge, QuickBooks essentially treats that like a cash transaction. My question is, what cash has gone out the door at that point? None. You could not pay that credit card bill for years if you wanted to, and you could sit on it and rack up interest. So that is not a cash basis expense. And if you're trying to do an analysis of what cash I've spent, your credit card transactions are not cash transactions. They're not going to tell you how much cash has gone out the door, and it's going to leave you with an inaccurate view of what your real cash basis expenses are. So again, Intacct does this right. If you've got a credit card charge, your accrual book is obviously going to reflect your liability the second you make that charge. Then you record what's called a charge payoff, which is recording the credit card bill you've received from your credit card vendor. That's just going to move it out of the credit card liability for you and move it into AP so that you can pay off that bill. And then the very last date there, when you actually pay your credit card bill, that's when you're going to see the expense happen in Intacct. That's cash basis because that's when cash has gone out the door. I understand that for taxes, you can sometimes take credit card expenses, whether or not they've been paid, but we have other reporting ways that we can accomplish that inside Sage Intacct. If you're doing a cash and accrual reporting, or if you're just looking for cash basis reporting, especially with the way things are in today's world, you're often going to be doing that because you really want to get valuable insight into your cash flow, and you're not going to get that if transactions are distorting it. So next, we're going to show a demo of processing a few of these kinds of transactions in a cash and accrual environment so that you can actually see how the software behaves. So I'm going to dive right into Sage Intacct here. So I've got a lot of tabs open because I have a lot of things to show you today. But I'm starting off here at Sage Intacct, which obviously, as I said before, is a cloud-based ERP. You can access everything from any web browser, any web-enabled device. So you'll see that right now I'm in Sage Intacct, and I'm at what's called the top level. This is how we handle multiple different entities. If I click this arrow here, I can see all the different entities I may be working with. So this is a very comprehensive pumpkin organization, which covers pretty much every need you might have in the arena. So we're going to start with an AP bill. So if I've got an AP bill, let me just find which tab that is. Here it is. I've got an AP bill here for a restaurant for some kind of event. And I've got my coding. So as I said before, we're coding to a natural account. And then I've got my various different dimensions that I may want to tag so that I can get reporting around what are all of my costs associated with events, or what are all my costs associated with marketing. So my AP bill is here. I'm going to go ahead and post that. Now, if I take a look at my P&L at this point, I've just created a bill on 6/25. So if I take a look at my P&L, here's my catering expenses for the month of June on the accrual basis. Obviously, if I toggle over to my cash basis reporting, and it's just that simple. You can toggle between accrual and cash. I have nothing, and I would expect to see nothing because I haven't paid it yet. So then let me go ahead and pay it. So here I am on my pay bill screen. So let me take a look at what's waiting for me to pay. Here's the restaurant bill that I wanted to pay. So I'm going to go ahead and pay this out of my bank account. I'm going to pay this as if I paid it in July. Yeah, I know it falls outside the current period. And I'm going to click this off. I'm actually going to do what's called a record transfer, and that's recording a payment as if I had wired it in the bank. So I'm going to do this, hit pay. Maybe I should select a bank. That would help. So I'll do the payment. I'm going to save that. Okay, and now I'm going to go take a look at this cash basis P&L again. Let me change it so that I'm looking at my cash report, and I want to look at it for the month of July. Oh, there it is. There's my cash basis expense. So that's how it works. The exact same concept is true of the AR side, except in reverse. And now I know that I did mention the credit card workflow is a little bit different. So let me show you how the credit card workflow works. I'm going to get rid of some of these tabs as I've used them. So here in credit card transactions, if I were recording credit card transaction manually inside Intacct, I would do it the way that I'm about to show you. But as we mentioned, Intacct has an open API. If you're using a solution already, like Expensify, like Nexonia, like Concur, Tally, I could rattle them off for days. Those all integrate with Intacct, so you're not going to need to do this manual entry because the transactions will just sync over. Same thing is true on the AP side, by the way. So I did just show you how to do AP inside Intacct, but if you're using Bill.com, AvidXchange, Concur, again, all of those have integrations via the API, and they will just feed in, and Intacct will be the receptacle for handling all those, and you'll still be able to get cash and accrual reporting because the transactions are coming into Intacct on a granular level. So anyway, if I'm recording a credit card transaction inside Intacct, let's say I'm recording a transaction here. My payee is obviously Starbucks. PSL early release, my favorite day of the year. And we're going to say it's meals and entertainment, and I spent $500 because I wanted to stock up. And then I can choose, obviously, the vendor that's associated with this charge, which gives me all that nice reporting. And then I can choose what class is this related to. Maybe it's related to an event that I'm doing. If I had other dimensions, I can open up the window and tag them if I don't use them as frequently. You're able to edit the layout of any of your screens if you wanted to, but this is good enough for me. So at this point, I'm going to save that transaction. Let's take a look again, back to my trusty P&L. I'm going to look at it on an accrual basis. So the credit card transaction is posted there right away, as I would expect it to. You'll also see I've got a balance sheet here, and if I refresh this balance sheet, I've got my credit card liability here. That all just flows right through. Now, the next thing I'm going to want to do is get rid of some tabs so I stop clicking the wrong thing for you. And then I'm going to do a charge payoff. So I've got my credit card statement. I want to make sure that all the things on my credit card statement have in fact been recorded and intact. So I'm going to record this charge payoff. My statement date, maybe my statement date is 6/25. And maybe I just opened this card, so this is my only transaction. So I'm going to click, yes, I want to pay that. That's going to then transfer to AP for me. So I'm going to click this, click save. And now I've recorded my credit card bill, which has in turn, if I refresh my balance sheet, I'm going to see this credit card liability go away. It's gone. It's been moved into AP. So then the last thing I want to do is actually pay that off. So I'm going to go back to my friend accounts payable, and maybe I don't pay that credit card bill until the middle of July because it wasn't actually due yet. So let me apply my filter here. Here's my credit card that I need to pay off. Maybe I'm going to pay that via a wire, so I'm just recording that it happened. I'm going to say I paid that July 15th. It's going to complain that it's out of the date, but that's okay. And then I'm going to select this bill, and again, pay it off. Hit save. Payment is done. So now if I go back to my P&L report and I switch this to cash, in June, I don't see any transaction unless I did the date wrong. Oh, wait, this is accrual. So in June, I see my expenses here. Then if I toggle over to cash in June, I don't see anything yet because nothing was paid. If I toggle to cash in July, here's my expenses. So you get that clear designation, and Intacct knows exactly how to treat everything the right way. And then same thing, obviously my balance sheet is going to be what my balance sheet is going to be. So those are a few examples of subledger transactions. And we'll get into more reporting and more of the exciting stuff as we proceed through this. Okay, so inter-entity transactions. So this is the next big pain point you'll often encounter in QuickBooks, and I've encountered before, is QuickBooks doesn't do a lot of helping you with inter-entity transactions. So if you have multiple entities inside QuickBooks, you probably have multiple instances of QuickBooks that you're signing into and out of, and your consolidation is not going to be anything impressive if you have it at all. And it's not going to record any kind of due to from if one entity is paying a bill on behalf of another entity, or if one entity is receiving cash on behalf of another entity. So Intacct does all that. Intacct will create those automated due to from transactions. If I pay a bill out of entity 100 and that bill was on the books of entity 200, Intacct is going to do the due to from behind the scenes, and it's going to be balanced. You can even do it on a journal entry level. So an inter-entity transaction, as I'm sure you all know, is a transaction carried out between two entities within the same company. Examples of the inter-entity transactions you might see, things like an expense for one entity paid by the bank account of another entity, payments received into a bank account of an entity that's different from the entity to which the invoice belongs. Anytime you're transferring assets between one entity to another, so if you're moving cash between entities' bank accounts, or you've got an intercompany loan or intercompany investment. So the features of inter-entity inside Sage Intacct are automated creation of due to and due from transactions for your inter-entity AP and AR, auto balancing for inter-entity journal entries, and this is a really cool thing that I will show you. Configurable inter-entity GL account setup. So not only having a due to and due from GL account, but specifying which due to and due from GL accounts should be hit when certain entities transact with each other, so that your reconciliation of inter-entity accounts is pretty seamless. And then if you're using Intacct's Global Consolidations module, it also has automated elimination of inter-entity transactions. So if you want to be able to show a consolidating schedule with eliminations, we have the capability to do that. So I've mentioned inter-entity journal entries and how Intacct can auto-balance them. This is another common thing that I see in QuickBooks is people will try to misuse the class dimension to represent entities. That doesn't work so pretty. What you're left with usually is a balance sheet that does not balance, unless you know that you have to record all these due to from transactions manually, by the way, to be able to do that. So what you've got here is, in this example, you're recording a transfer of cash. So you have $10,000 is coming out of the corporate bank account, as you can see in the location column here. $10,000 is going into the KFC bank account. And if you look in the top section of this journal entry, you see a box that's called source entity. Source entity means which is the paying or receiving entity in this case. So what we're telling Intacct here is our source entity is 100, which is corporate. They're the paying entity. So the money's coming out of their account, going into KFC's account. Right now, you can see this transaction is not balanced by entity. In QuickBooks, by the way, it would let you do this, and then you'd have a mess to deal with on the intercompany side. In Intacct knows that this is wrong. It is going to take measures to address it for you so that you're not left with unusable reporting. How does it do that? On this next slide, this is how, let me see, my slide did not change. Okay. On this next slide, this is how it does it. So when you post this journal entry, you can see the original transaction, which was not balanced. Intacct auto-generates the second section of this screen, which is the balancing part to do the intercompany transaction. So it has balanced the entry for you. It has recorded a transaction saying that KFC owes corporate $10,000, and that corporate is owed $10,000 from KFC. And it's using the proper GL accounts, which we've set up in the configuration. So that's one example. That's one of my favorite examples because it's balancing something like a journal entry for you for interentity is just really awesome and saves a lot of time. So then another example here is say entity 100 is paying a bill on behalf of entity 200, or maybe you have a shared bill, whatever the case might be. So this is kind of numbered for you to be able to follow in a logical pattern. So you see step one here, an AP bill is created. And that bill is maybe office expenses for KFC. So Intacct is recording that expense, recording that AP, tagging it to KFC. Then you get over to the two series of events. So when the bill gets paid, the bill is going to get paid, and it's paid out of the operating bank account, which belongs to a different entity. So we see that payment happen. Then we see the interentity payables. And these are all these entries are firing automatically. There's nothing that you have to do yourself. All you're doing is paying the bill through the AP screen, like I showed you a couple times before, and all of these things happen. So obviously it's relieving our AP, and then it's recording the liability on KFC and the receivable for corporate. So all of your interentity, again, staying balanced automatically. The most important part of all of this is after all these transactions happen, after all this wonderful configuration is done, what reporting can I get out of it? Because our deliverable for the most part as accounting and finance professionals is going to be what reporting we can provide so that people can understand what's going on in the business, and so that we can pass audits and do tax returns and all those kinds of things that we have to do. So reporting that we can get in the interentity arena, this is an example of a balance sheet. And notice I've called out here, the interentity accounts are balanced because all of this intercompany activity is happening through automation. So it doesn't require high touch from somebody to go and make sure that they record these journal entries to do the intercompany. See, it's just happening. Our intercompany receivable equals our intercompany payable. This is one example of a summarized balance sheet that we can create. Now, this next example, I had alluded to early on that we've created some pretty powerful cash reporting. This is an example that takes the place of something that I, as an outsourced controller, used to have to prepare in Google Sheets. This is basically a comparison of what is our budget or forecast on a cash basis and what are our actuals. And then furthermore, what is my weekly activity on a cash basis so I can see how I'm trending. Now notice, obviously, as I said, we've got our weekly breakout of our cash activity. But then if you look at the bottom call out here, we've incorporated balance sheet inflows and outflows so that we can see a true picture of how did I get from my beginning to ending cash. If you're trying to do this in QuickBooks, you can't, because QuickBooks is going to give you a cash basis P&L, but that does nothing to consider some of your outflows, or many of your outflows sometimes, are happening entirely on the balance sheet, and you're never going to be able to say, okay, I started with this cash, my P&L shows that I gained or lost this much cash, here's my ending cash, because you are missing a piece of the equation. But because we have probably one of the best financial report writers that's included in any accounting software here, we're able to create a report that then takes into account these balance sheet outflows. So now I've got things like, obviously here I've got my cash basis net income or loss. Then I've got, hey, I have some balance sheet outflows for capitalized expenses. Oh, I also have balance sheet outflows for debt that I'm paying down. I might have balance sheet outflows for 100 other things that only happen on the balance sheet. And if you don't capture those, you can't get this true picture of how did I really get from beginning to ending cash. And that's something that people struggle to get so that they can manage their cash budget in addition to being able to manage their accrual budget? Well, we can build it in a report like this. And the foundation of this, by the way, is cash and accrual reporting, because what I've taken here is a cash basis P&L, but then I've added in lines at the bottom within Intacct's report writer to factor in any of that balance sheet activity. So I can figure out very easily what was my change in cash position, and I can also prove that my beginning cash plus or minus my cash position change is equal to my ending cash. So this is a report. This saved me 5 to 8 hours a week, probably, as a controller, because to do this offline, you'd have to go in. I had a Google Sheet schedule. I figured out all my cash activity from QuickBooks, had to manually put it into some Google Sheet that I was doing, and then produce this somewhat report, which was nowhere near as good looking as this. And I didn't always also get the granularity in where were my areas of cash coming in and cash coming out, because I tried to roll up and assign my own categories to make it easier to manipulate that data from QuickBooks. I don't have to do any of that when I've got cash and accrual reporting here in Intacct. So another thing on the reporting side, you're going to have a lot of native reports inside Intacct that allow you to filter on cash and accrual. This is a list of them. There's a lot of them that I've called out with a couple asterisks on them, and that's because these are reports that you can build and develop and do whatever you want on your own, or add filters on your own, or create groups of dimensions that you report on. So they're virtually endless possibilities. So though you may see one bullet point on the slide, it really represents thousands of different reports that you could probably come up with that you can have cash and accrual insight on. So now we're into our next and final demos before we open it up for a Q&A. So in this set of demos, I'm going to show you processing and reviewing inter-entity transactions. And then I'm also going to show you running and reviewing some Sage Intacct reporting and the kinds of cool analysis and drill down you can do with that. Whoops. Okay. So back to my Sage Intacct environment. I've got a bill here for Farmer Chuck. He sends me my pumpkin seeds for my events. And if we take a look at this bill for Farmer Chuck is for my entity, Pumpkin Spice, the Lost Spice Girl. And these are critical supplies for the fall season, $20,000. However, I'm going to pay this bill from a different bank account. Right? So I want to pay this bill from my Farmer Chuck bank account, perhaps. And I'm not seeing my bank right now, so I may have to skip this for the moment. But you can pay it from the operating bank account, and we're going to get our inter-entity transaction. The reason that we're able to do that inside of Intacct is because of this concept. So remember I said when you're working in QuickBooks, you're going to have all these different isolated instances that you have to slide in and out of. Because we have this concept here where all of our entities are in the same container and we can slide between them, you don't have to do all this manual work because Intacct is handling that balancing for you. So, and I think the reason is in this environment, I may have disabled that capability because I was using it for a different training, but I can show you a different way to reflect the inter-entity behavior just so you can grasp this concept. So the other way that we can do it is, as I mentioned, we can record a transfer of funds between accounts. So here I've got a journal entry where I'm recording a transfer of funds between accounts. I'm again indicating my paying entity here is my instructor entity that I have. And the money is coming out of instructor's checking account, so $50,000 out. $50,000 is coming into Pumpkin Spice Lost Spice Girl. So when I post this transaction is posted. And if I go back in and view it, let me just toggle one thing quickly so that you're able to see this better. Okay, I've toggled something so that I'm hoping that I can now show you how it's actually working. Sorry that I did not change that earlier. Let me apply that. Let me see if I can see this. I'm going to duplicate this transaction. So here again, I've got my transaction, which is a inter-entity transaction between these two entities. I should be able to post this, and then I should see intercompany activity. So I think we're going to have to rely on the slides for this. My apologies for that, because I must have missed a step when I was preparing for this. But I will show you running and reviewing the Sage Intacct reports. Okay, so if I look at balance sheet detail, I've got a detail here of multiple entities where I can see all the activity for each of the entities and then a total. So you can group the entities however you may want to group them, and you're going to get the total of the activity for any set of entities you include. So if you've got more than 2, you can have as many as you want on here, but maybe you have 10 entities, you only want to look at the activity between 2 entities at any given time. You have the capability to create different roll-ups and group, and that's what I'm showing you here, because you can see here, I've got well over 2 entities, but I've now isolated this report so that I'm just taking a look at these 2 different entities that are part of the group. The other report I wanted to show you is this cool creative report that I showed you on the slides. So this is where we have a weekly drill down of our cash results. So here I've got my actual month to date. If I had a forecast or a budget here, I'd be comparing it to that and seeing what percentage of that target I'd achieved. But then I also have a week by week breakdown of what that activity was. So if I drill into any one of these, it's going to show me here's what the transaction was. Now, again, this is not a cash basis. How do I know that? Well, I selected a cash report, but anyway, you can see in here, remember I had said the journal symbols are going to be distinct to show you whether you're working in the cash reporting or accrual reporting. So this GJC is the symbol that I created for cash. Also, this expense could have been from months ago, but this is being reflected when I pay it. So this is giving me all this nice insight. Then I'm also seeing, obviously, my cash basis, net income or loss. And then I get to, okay, here's the outflows that I had for office equipment. Here's the outflows that I had to pay back my line of credit. So here is my true change in cash. So my change in cash was not $43,972. It was $41,472. And then if I were to do the math, obviously this is going to add up to show me my cash beginning of period plus this gives me my cash end of period. So it's a wonderful report to be able to really get insight into where your cash started and ended, which you're not going to be able to do something like this if you're using a solution that doesn't have a robust enough report writer. So at this point, I would like to open it up for questions, and I will obviously leave our contact information on here as well while I'm doing that. So please feel free to put any questions you may have into the Q&A.
Oops, sorry, I was on mute. Thank you, Jim. That was awesome. Yeah, we'll see if any questions trickle in. I'm not seeing anything right now.
Okay.
Also, Jim, do you want to explain the link kind of at the end too that we'll provide?
Sure. Yeah, so we will be providing, in addition to the materials from this session, in the appendix, you're going to see a couple of links from us on additional presentations and resources that we've provided in the past for cash management. So okay. These are a couple of other great presentations that we have done before around the cash management topic. So if anybody has interest in looking into those further, of course, you can always contact either us for additional questions. And have we seen any other questions come in on the Q&A or in the chat?
No, Jim, I'm not seeing anything, so I think we're good. I mean, if anybody thinks of anything, like I said, we'll be following up and providing this information, so we'd be happy to answer anything if it comes up. So I guess we'll give you guys some more time back in your day, and thanks, Jim. That was good. Thank you, Philip, and thanks, everyone, for joining us. I hope everyone has a good rest of their week.